Hi, and welcome to the Access Direct Opening Bell, your essential pre-market podcast. In just minutes, get key global updates, overnight trends, and market-moving factors that set the tone for the day. Whether you're a seasoned trader or just someone tracking the markets, this is your go-to briefing to stay ahead at all times. So let's dive straight in. Good morning on a Friday, and we will start with US equities, where in a rare event yesterday, all four major US indexes simultaneously clocked new records. The S&P 500 gained 0.5% to 6,632. The Nasdaq 100 climbed nearly 1%. The Dow rose 0.3%, and the Russell 2000 advanced 2.5% to its first closing record since November 2021. The prospect of more rate cuts from the Fed is acting as a tailwind for stocks. Meanwhile, data showed that jobless claims dropped by the most in almost 4 years, reversing a sharp jump seen in the previous week. In related markets, the VIX closed flat, while the dollar index and the 10-year Treasury yield gained for a second session. Gold finished 0.4% down at $3,644 an ounce in a session peppered with plenty of volatility, while Brent fell for a second day and closed under $67.50 a barrel as President Trump pressured allies to stop purchasing Russian oil. Coming home, the rupee's gains about 88 reversed immediately, sending it to 88.13 at the close. The currency came under pressure as the dollar rallied against most Asian peers. Speaking stocks, in the Nifty gained 93 points to finish at 25,424. With the India VIX dropping 3.5% to 9.88, this was a record low close for the fear gauge. The benchmark has risen for 11 sessions in 12, as investors' hopes are running high about a potential trade deal with the US. Mid-caps and small-cap stocks continued their winning run. 8 of the 12 NSE sectors rose, with pharma and IT stocks advancing 1.5% and 0.8% respectively. Energy stocks fell 0.4% and were the worst performers on the day. NSE 500 Brent was evenly balanced. Eternal was the top gainer in the Nifty, rising 2.9%, while Coal India was the top loser as it fell 1.7%. Technically speaking, yesterday's candle has traced a hanging man pattern, so today's open and close will be key. Near-term bulls need to hold the previous session's low at 25,329, especially on a closing basis, with second support coming in at 25,255. Resistance lies at 25,500, followed by 25,670. Elsewhere, provisional data show that foreigners invested 367 crores yesterday. The month-to-date outflow sits just under 11,000 crores. On to derivatives, in the Nifty's put-call ratio went from 1.21 to 1.16, while the Bank Nifty's ticked slightly higher to 1.1. Nifty call addition was more than the number of puts that were added, and implied volatility fell 20 basis points, which means at the close, people turned cautious. For options set to expire on 23rd September, resistance lies in the 25,400 to 500 area, while support sits inside the 25,300 to 400 zone. Meanwhile, 1% out of the money put volatility dropped more than similar distance call volatility for a second straight day, in a continued sign that volatility traders stayed confident. Speaking net index options activity, foreigners and proprietary traders turned bearish, while retail investors flipped to bullish for the upcoming session. Elsewhere, foreigners' net shorts in index futures dropped by another 6,000 contracts to 143,000 contracts in a continuing reduction of the bearish view. Looking forward to the day, the GIFT Nifty was down 45 points at 7 a.m. Asian markets were overwhelmingly higher along with US index futures. Coming to stocks, Lupin was at horizontal support, while ABB, Central Bank of India and IRFC were at horizontal resistance. GNFC, Shyam Metallics and Paytm were at trendline support, while Aurobindo Pharma, Bandhan Bank and Deepak Fertilizer were at trendline resistance. Talking NSE 500 breadth, 63% of stocks were above their 50 and 100-day averages, while 69% of them were above their 200-day moving averages. That wraps up the day's podcast. Please note that this podcast serves solely for informational purposes and should not be considered financial advice of any kind. For a comprehensive disclaimer, please visit our website. Thank you, and we will see you on Monday at the same hour. Have a good day and an even better weekend. Thank you.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.